Hi, welcome to Cash Flow Planning for Women in Divorce, a webinar that is designed specifically for women living in Michigan that are in the process of divorce, but it could apply to people in other states as well. My name is Jacki Roessler, and I'm a certified divorce financial analyst. I've been a certified divorce financial analyst for over 20 years. Not going to say how many over, but definitely over. My practice focuses exclusively on the financial issues in divorce. So I don't manage assets and I don't give advice on college funding and retirement planning. My entire practice is focused on divorce-related work. Attorneys will often refer their clients to me to help educate them about the impact of the financial decisions they're going to be making, as well as advocate for them. I also sometimes work with couples in a collaborative setting where I work with both sides. So I've done it all. One word of caution before we begin, I'm not an attorney. So any of the information that you receive here in this webinar is not to be construed as legal advice, and I highly recommend that anyone considering or in the process of divorce seek out the advice of a qualified family law attorney. So all of the information that I'm giving you today is not for advice, but for educational and informational purposes, and it's just based on my experience. A few housekeeping items. If you have any questions, please feel free to send me an email. My email will be posted at the end of this webinar. All chat features are disabled, so again, if you have any questions, feel free to jot them down and send me an email, and I'll be happy to answer those. Please visit our website for blogs and upcoming webinars on all different kinds of financial planning topics, not just divorce exclusive, but we've got topics on just about everything that you can imagine that is pertinent to you today. And our website is www.centerfinplan.com. So let's begin. I found that for most people that I meet with, their biggest financial concern about their pending divorce, regardless of their financial circumstances, their stage of life, or their educational background, is, will I be able to pay my bills? That is their number one question, and it's as simple as that. Can I afford this divorce? When it comes to divorce, my job is to be the pragmatist, the realist, the numbers person. This morning, I'm going to give you enough of the right questions for you to start taking on that role for yourself. As for the answers, well, that's not as simple, but armed with the right questions, you'll be off to a good start. So let's dig in. Once you or your spouse files for divorce, a machine is set in motion. During this temporary phase, the discovery process begins. Now, during discovery, your attorney will help you gather all the financial information that you will need to resolve the case. It can be either informal, where your attorney picks up the phone, calls the other attorney, and says, hey, can you send over all of John's information related to his employment, payroll stubs, employee benefits, retirement account information, summary plan descriptions, all of that, tax returns, and the other attorney says, sure, I'll send that right over to you. More common in cases that I've worked on is what's called formal discovery, where a series of questions via a document called interrogatories are sent out to the other side, and they're usually not particularly tailored to the case at hand. They're usually fairly generic and all-encompassing, and it can be a 60-page document, 60 plus in my experience, where your spouse is required to answer all the information truthfully and provide all the documents, as well as you might also receive that type of a request. Now remember, what we're talking about cash flow first in the first part of this webinar, we are talking strictly about the temporary period once you file. There's a difference between what kind of information you're going to be gathering on a temporary basis and what kind of information you're going to be gathering when we talk about long-term projections. So there are a few different issues to address at this temporary short-term point. First one is the financial status quo. Then I'm going to cover additional temporary expenses, legal fees, and giving your attorney the best tools to be your advocate on a temporary basis. So looking at the first issue, In many cases, your attorney will make a formal request through the court asking that there be a continuation of the so-called financial status quo. Now, that could include ensuring continued mortgage payments on your house, health insurance premiums are paid, regular monthly bills like your electric bill, your cell phone, etc. If an order like this is put in place, you want to make sure you understand all the terms of the order. Does it just include the continuation of all ongoing household bills, or does it also include items such as you taking out, let's say, $200 a week in cash or other discretionary expenses? This is a good time for you to start gathering information on the household expenses. Now, oftentimes, the person who's been paying the bills will continue making those payments. If that person is not you and you don't have access to a cash account or a credit card, part of the status quo should address your ongoing expenses. For example, there are items that you're going to be paying that are not going to be addressed in your ongoing monthly bills. For example, you want to make sure that if you have any additional cash items that you pay for on a regular basis, it could be your children's extracurricular activities, it could be allowance money, it could be doctor's bills, anything that you have to pay for out of pocket that wouldn't normally be considered part of your regular expenses. And it's a good idea now to start tracking all of those items, including things like groceries, entertainment costs, just spending money, housekeeping services, etc. Another important issue to address in this interim phase is who will be paying your legal fees. This is another important conversation to have with your attorney prior to filing. There is a portion of your legal fees that you might be able to deduct on your taxes. You need to consult with a qualified tax preparer, CPA preferably, to determine what portion of your legal fees you can deduct. However, if you request your attorney to give you a breakdown of their final bill in terms of what is tax deductible and what is not tax deductible, that will help in case you're ever audited. So you are able to deduct anything that has to do with you obtaining alimony or spousal support or receiving any specific tax advice. You can't deduct any of the advice your attorney gives you that's legal advice not related to tax issues. However, if you are trying to receive a certain amount of alimony, or in Michigan it's called spousal support, a portion of that may be deductible depending on what your adjusted gross income is. And that would fall into miscellaneous or other expenses, and there's a 2% of your AGI limit that you can deduct. So again, you need to seek specialized tax consulting on that. However, you should be aware that a portion of your legal fees may be tax deductible for you. And then we want to make sure that we also keep track of the temporary expenses that in the future might end up being tax deductible to you or your spouse. And that would include real estate taxes, mortgage payments, and perhaps for some clients, extraordinary medical costs. And I'm going to talk a little bit more in a moment about those tax deductible expenses. Okay, so is there any reason to have a formal temporary order in place? The answer to that of course, is going to depend on the specific circumstances of your case, and you need to consult with your attorney about how this affects you. But one thing that I want to bring up, I actually just found out some of this information that I wasn't aware of before. Aaron Wasserman of Centerbrook Mortgage, whose information you can look up on the internet, he specializes in working with clients that are going through divorce. He's a mortgage specialist. What he mentioned to me is that your temporary support payments can count towards qualifying for a mortgage as long as they've run for a certain amount of time, and as long as the money is going into a separate account in your name, in other words, not going into a joint account. So that was an important thing to consider in terms of whether or not you want to have a temporary order on file with the court. So in other words, if my husband says, well, I'm going to just continue to put the money into our joint bank account and you continue to pay the bills on that money, that might be able to qualify you for mortgage qualification purposes to show income. Unless that money is going into a separate account in your name, that's a really difficult case to make. It's a better case to make, as Aaron reminded me, if you have something in writing that says this is the temporary this is the temporary cash arrangement, and there's an expectation that that will continue on past the final judgment for at least a total of 36 months. So you want to make sure that any temporary agreement that's in place also has a lot of detail in it, so that you minimize some of the stress while you're going through the process of divorce. Okay. One last item before we turn to more long-term cash flow planning. Your tax filing status for 2017 depends on your marital status on December 31st of 2017. So if you are married on December 31st, your only option is to file married and separate, which is not a good tax category to file in, or married and joint. If you were divorced on December 30th of this year, you don't have the option to file joint tax returns. So you want to make sure, again, that you consult with a tax specialist to make sure what your options are as we're getting closer to the end of the year. Another thing to keep in mind as we get close to the end of the year is that the House and Senate both have a bill in place that could make some significant changes to our tax law. One of the big changes proposed in the House bill is a change that will eliminate the deduction for alimony payments, which is something really important for us to keep in mind, or for you to keep in mind when you're going through the process of divorce. It's most often, for the way that the law works now, any alimony payments that you receive are taxable income to you. You have to pay taxes on that amount and deductible to the payer, which is a benefit. It's a way to leverage income from a high bracket to a low bracket. The House is trying to get rid of that, and so that's going to change the way we look at cash flow needs on an ongoing basis. So I will cover that momentarily as well. Okay, so now we're going to put away our temporary and our short-term basis cash flow issues, which are probably right at the forefront of your mind. We're going to try and take that hat off, though, and now we're going to switch to what's really most important that you negotiating your case and think about your long-term cash flow planning. So the first step when you're taking into consideration long-term cash flow planning for yourself, what is my life going to look like post-divorce? You want to take stock of the potential income sources that you're going to have. So the first one would be child support if you have minor children, and that is based on a formula in Michigan that takes into consideration your income, your spouse's income, the number of overnights, and the number of children that you have, and it spits out a recommendation, and that's pretty much whatever the number is, that's what it is. There's very little gray area around child support. Child support is not taxable income to you. So if you were to receive $2,000 a month in child support, you get to keep the full $2,000 a month. Same for the person paying it. If they owe you $2,000 a month, then that's what it costs them. They do not get a tax deduction for that amount. A second area of potential support is spousal support. It's also alimony. Some states call it maintenance, but it's all the same thing. It's generally set up as temporary. Sometimes it can be permanent. And it is currently, the way the tax law is right now, it is taxable income. You can agree for it not to be taxable. In all of the years that I've been doing this, I don't think I've had one case where the parties agreed that it would be non-taxable and non-deductible. So most often, the spousal support is set up as tax deductible. What that means is if you're getting $2,000 a month in spousal support, you don't actually get to keep that full amount. You have to pay income taxes on that. So maybe you're only going to keep $1,500 a month out of that $2,000, and the rest of it's going to go to Uncle Sam. So that's important to know when you're looking at what you can afford long term. Of course, your earnings from any wages that you have is another income source, as well as any investment earnings. If you have rental property, all of that kind of income, you should take that into consideration as well. Depending on your age, Social Security income also may be a source of income for you, as well as pension income. So these are all income sources, and again, we're just trying to get everything down on paper. One of the things that's important once we start, now we have income sources listed, now we start thinking about our expenses. An interesting point, a lot of people don't know this, I mentioned that child support is based on a formula. Child support actually does not cover the things that I've listed out here, and a lot of people have that misunderstanding that these things are going to be covered by child support. Your child support does not cover extracurricular activities for your kids. It does not cover tutoring, private school tuition, college funding, camp allowances. In other words, child support does not cover the actual expenses of your children. So if you have minor children that you have some of these expenses, just because they've been continuing for the past several years does not mean that your spouse is required to continue to pay all or a portion of these types of expenses. So again, it's really important that you start keeping track of all of the expenses that you're going to incur so that when you finalize an agreement, you can give your attorney the tools to have a very detailed and thorough written agreement as to who pays for what. You don't want to leave anything hanging when the divorce is done. After everyone signs on the dotted line, there's very little incentive for anyone to come back together and try to renegotiate some of these things. So the more detail that you can give your attorney, the better. Now, this would be a good time for you when we're talking about long-term expenses to go and get a budget worksheet. If you go to my website, centerfinplan.com, there's a tab at the top that says Services, and then Divorce Planning, and at the very bottom of that page is a budget worksheet that you can use after this webinar is done. Again, I can't stress enough how important it is for you to give your attorney the tool of how much you need to live every month. So you want to start keeping track of everything. And again, now we're talking really about protecting your long-term financial future. So we're not even thinking about anymore how is the electric bill going to be paid tomorrow. We're talking about longer-term cash flow. So there are some expenses that you don't currently have while the case is pending that you may have in the future, and that's another area that we would help out clients with, trying to pinpoint expenses that they don't currently have. So you may have health insurance through your spouse now. That is no longer going to be available to you when you are divorced for most people. As long as the company has a certain number of employees, you are allowed to go on COBRA for up to 36 months post-divorce, which is different than if you just separate from service from a job where you have 18 months. You can go on COBRA for up to 36 months of continued coverage. COBRA, though, is not such a great deal. The premiums payments are usually very expensive. It can be anywhere from up to, I believe they can charge you up to 150% of what the premium is that they pay for an employee. So it's costly. And at the end of the 36 months, there's no guarantee of continued coverage. The other thing to keep in mind is that now is a good time to consider going out and getting your own individual health care policy. When you get divorced, that is a qualifying act under Obamacare or the Affordable Care Act, and you can get new coverage as long as that Affordable Care Act is still in place, which may or may not be in the near future. But for now, you can go out and get your own insurance policy upon the divorce and not have to worry about pre-qualification. But that may again change in the future. It is also a cost that you want to investigate now and put into your budget. You may end up having higher deductibles and more out-of-pocket costs than you have currently as a married couple. Another thing that a lot of my clients are concerned about is, now that I'm getting divorced, what happens if I end up needing to go into a nursing home facility, or if I want to stay in my house, my spouse was always going to be the one to take care of me. Now what? So exploring the idea of how to cover those types of costs, again, depending on what stage of your life you're in, it may be worthwhile looking into long-term care insurance and adding that as a line item into your budget. You also are going to need to make sure that you have life insurance to secure any child support or spousal support. And you may be the one that might want to end up making those premium payments. So in the final settlement, again, something else that you don't currently incur that you want to make sure you have in your budget. There may be ongoing legal fees, sad to say, but many cases end up back in court for some reason. Hopefully yours will not fall into that category, but if you do, you want to make sure that you have something in there for ongoing legal fees. There are also loose ends that need to get tied up. If you have a retirement account that's being divided, for example, those are things that usually occur post-judgment that you're going to need to prepare to make sure you have the legal fees available in your account. And for those of you that are planning to work with a financial advisor post-divorce to help you make financial planning decisions, you want to make sure that that is taken into consideration as well in your budget. Those are just a few items. So some of the expenses that you might overlook that, again, would be listed on the budget worksheet that I'm providing to you are ongoing home maintenance. So I have a client sitting in front of me. She says, I want to keep the house no matter what. And then we start itemizing out all of the expenses of the house, that maybe it's winter right now, so we're not thinking about landscaping costs and having someone come out and do the weeding and take the leaves away and all of those smaller items, not to mention that there might be some large ticket item that breaks that you might be responsible to fix. Other things that we don't sometimes take into consideration are our children's expenses, and I spoke about that earlier in terms of what child support does not cover. You might need to be thinking about re-entering the workforce or trying to find a way to increase your earnings. And so that means that you might need to put into your budget some tuition costs for retraining. And that would be an expense that you definitely do not want to overlook. And then there are career costs. If you've been out of the workforce, you're going to need to go out and buy some work clothes. When you're working, you may be eating out more because you don't have the time to prepare lunches, or it's just more convenient. And so for some people, they have additional transportation costs that they don't currently have. So if you currently are a stay-at-home parent and now you're going to be commuting an hour back and forth to a new job, you need to make sure that you have some increased gasoline costs and maintenance costs for your vehicle. But the two biggest oversights, and I can't state this enough, that most of my clients don't take into consideration when they're looking at what their cash flow needs are taxes and inflation. So as I said before, when you receive alimony or spousal support, generally it's going to be taxable income. So if you get $2,000 a month, you don't get to keep the full $2,000. And a lot of my clients forget that. So one of my very first cases many years ago, the client was sitting in front of me. She said, my attorney sent me to you, but I really don't need you. My husband has offered me $8,000 a month. I added up my expenses, and that exactly covers the needs for me to stay in the house with the kids for the next 3 years. And I looked at her budget, and she was right if she didn't have to pay taxes. What she hadn't taken into consideration was that she was not going to get to keep that full $8,000 per month. That $8,000 was probably going to net her closer to $6,000, which made a big difference in her budget. The other thing that she didn't take into consideration was that what it costs to buy groceries and gasoline and clothes this year is not what it's going to cost next year. So whatever agreement you end up with in terms of what your child support amount is and your spousal support amount, it is not going to go up with inflation. Although every year the cost of living goes up by about 3% per year on average. So again, those are things that need to be taken into consideration if you are going to determine whether or not you have enough money coming in to cover all your living expenses. So the big question of the day is, how do we put all of this information together? So as a divorce financial planner, I've got all of these numbers, and how do we make sense of all of them? First and foremost, a post-divorce projected budget is essential, and I cannot stress that enough. I know that by the time you're done with this half-hour webinar, you're going to be tired of hearing me say that, but that is the most important takeaway from this webinar, is that you need to get down on paper what your potential post-divorce budget will be. If you don't get those down on paper, it's impossible for you to communicate your needs. So no one is going to care as much about the end result of your case as much as you. You're the only one that has to live with it, not the attorney, not your ex-spouse. It all comes down to you. So giving your attorney a detailed budget is the first step in you advocating for yourself. So the way that we put it all together is, if you can take a look on the left-hand side of the screen here, post-divorce expenses. This is just a tiny little snapshot of what that budget worksheet looks like. So to figure out, can you afford to stay in the house? Can you afford the spousal support number that you're being offered? Is that going to work for you? Do you need to go back and have some retraining to increase your income earning potential? Number one, we look at your post-divorce expenses. Then we subtract off all of the income sources that you may have, whether that's child support, spousal support, earned income, investment earnings, rental property income. All of that is going, pension income, Social Security, it all comes into this equation. And then we have to take off for taxes, make sure we take the taxes into consideration. And we're also going to adjust for inflation, for a 3% increase on inflation every single year going forward. And what we come up with is something that looks like this. I can get the slide to move. So I know this looks like a lot of numbers. What this really is this is a tool. This is from a software program that I use internally in my office, but it's a tool that takes into consideration all of your income sources, deducts off expenses, and then lets us know at the end of the day, do you have enough money to cover your monthly living expenses? And if you don't, the secondary question that I always look at is, do you have enough assets where you can support your expenses beyond cash flow? Which for many clients, if you're in your mid-50s and you're getting divorced and it's a long-term marriage, you might need to look at yourself as if you are an early retiree and understand that you might need to start depleting some of your retirement assets. And maybe that's okay, and maybe it's not okay, depending on your circumstances. But it's always important to know. So if you look across here, I couldn't get the entire spreadsheet all in one page, so it's staggered a little bit. But this is over a short-term period. I usually take a look at 20 years out. And this, again, you'll notice that in this particular case, we assumed that the client was not going to be earning any money temporarily, that she was going to have living expenses that included college tuition for her to go back to school. And so we assumed 3 years of no income, and then her income beginning at a conservative number of about $25,000 per year in income. So what do I use this tool for? I use this tool to help educate my client on what they can afford. This is a tool for them to say, yes, I think I can afford to keep the house, or it looks like I can't afford to keep the house for anything more than 2 years. So we look at this and then we go back to the budget. And I'm going constantly back and forth between cash flow projections and tweaking the budget. Can we reduce expenses? Is there some other way that we could increase income? Do we have a case to make for additional spousal support beyond what might be offered? Or are we working with the attorney to help craft a settlement proposal for what the client needs? And that's what we use this tool for. Now you'll notice on the budget worksheet that I have posted on our website, I've also put down that it's important to get not only your expenses post-divorce, but your spouse's. So there's a space for spouse 1 and spouse 2. And the reason for that is twofold. One, I often work with both parties in a case, and so we're looking at both parties' expenses and what they both can afford to pay and what they both have in terms of financial need. But if I'm working with one client, I still want to know what the other side's expenses are, because that helps me determine what their financial ability to pay is in terms of spousal support. So if my client needs, let's say, $3,000 a month in spousal support for 7 years, but I can see from the expenses of the other side and their income that they can't afford it, there isn't any purpose in asking for it. So it's really important to get good, detailed, thorough information on both parties in terms of what can and can't be afforded. So my final tips for you, number one, and probably the most important, is make sure that you provide yourself and your attorney with the tools that they need to be your advocate. And again, I'm going to beat this one down to the ground, but having a detailed budget is so important for you. A lot of people don't do this on a regular basis, and they're not getting a divorce, and it's very helpful exercise to go through and figure out where all your money goes. But when you're going through a divorce, it's absolutely essential. key piece of the puzzle, and you want to make sure that you include expenses that you don't currently have, anticipate things that you may incur that you don't currently incur, whether that's tuition for yourself, going back to work and having a new work wardrobe, or health insurance, healthcare related costs. All of those things need to be taken into consideration. As well as things that you may overlook, things like expenses for your kids, birthday parties, birthday gifts, holiday gifts. All of those things need to be in your budget. And even though we're all anticipating after we're getting a divorce that our expenses are going to have to be tightened up a little bit, you want to start off your budget with what your realistic expenses are, and then move down if you need to. But for some people, you may not need to reduce your expenses, and we definitely want to start your budget off not with what you wish you could spend on different items, but what you actually currently spend throughout the marriage. You want to make sure that you are extremely thorough and that you take the time that you need to get the correct post-divorce budget to your attorney. Same thing is true if you're trying to secure temporary support, to make sure that you provide your attorney with enough backup information to argue your case for you. The big mistake that I often see clients make is they forget to factor in taxes and inflation. And those are two things that really need to be taken into consideration for you to analyze any settlement proposal on the table. Not only do you have to pay taxes on spousal support, obviously you're going to pay taxes on any investment earnings that are outside of a retirement account, as well as real estate taxes, property taxes on additional property that you own. So you want to make sure that your taxes are taken into consideration. And my final word of recommendation is make sure that you understand your entire agreement. And if you think that something isn't covered in your final judgment of divorce, make sure you ask the question. There isn't any question that is a, quote, dumb question when it comes to settling your financial future. Better to ask and say that it's not, and get the answer that it's not needed, than to leave that question go by the wayside. So, for example, if you're concerned about how your children's private school tuition is going to be paid, that wouldn't be something that you'd want to just leave up to, we'll figure it out. That really needs to be discussed and put in detail in your final settlement agreement, as well as what happens if one or the other of us doesn't follow through on some of our cash flow agreements. What is the recourse? That would need to be in your agreement as well. And so any experienced family law attorney will walk you through those checks and balances, but it's always good for you to remember that you are your strongest advocate. And even if you find out that, for example, you can't afford to keep the house, and that's what you really wanted out of the settlement, or that you recognize that you're going to need to go from part-time work to full-time for a certain number of years, I truly believe that that information is empowering for you to have. Better for you to know that now rather than find out in 3 years when the divorce is done and settled and it's too late to make any changes. I find that just having that information in clients' hands makes them feel so much better agreeing to a final settlement. So again, if you have any additional questions, email me. There is my email address. And feel free to go on to, again, our website, look for under services, divorce planning, and click on the budget worksheet on the bottom left corner of that screen. Thank you for joining us.